His innovative hands-on approach and keen eye for detail can be felt in all that he does. As an investment manager, he works with many of Canada's wealthiest families. On the development side, he's changed the game with a flurry of timeless luxury developments across the GTA. Kash Pashootan is the CEO of both First Avenue Investment Council and Emblem Developments. Kash, thank you so much for your time, and thank you so much for doing this with me.
Thank you,
It means a
Saurabh.
lot.
Thank you. Great to be with you.
Thank you. Kash, as a highly respected investment manager, you're involved with lots of different investments. Why is real estate so important to you?
Look, real estate is an asset class that you can't deny as part of an overall investment strategy.
Right.
When you look at the smartest investors out there, whether it's pension funds, endowment funds, or even just very wealthy families, real estate is always present. And so whether you're just starting to invest or you've been investing for a long time, whether you have a little bit of money or a lot of money, you cannot deny having exposure to real estate. And of course, there's different ways to get that exposure.
Yes.
But as an asset class, as part of the overall portfolio, we feel, and many other smart institutions and investors feel, that it's crucial that it represents part of your overall portfolio.
And if you look at all these multi-millionaires, multi-billionaires, there's always real estate involved. Even if you look at the multinational corporations, there's one aspect has to do with real estate. There's always real estate that's part of the portfolio. I mean, in the 70s, we used to talk about like hundreds and thousands of how much the land or the houses were, like 25,000, 100,000. I remember when I was in high school, my parents' house was, what, 300, 400,000? Now the same houses are like in millions.
Yeah.
Obviously, that kind of return you don't see anywhere else. And one thing I always tell my clients is we do not manufacture land. Like,
Yeah.
I mean, we're not Dubai. We're going to put sand in the water, make islands out of it, but we just don't have that infrastructure, and it's just not something we manufacture. So the more the population grows, less scarce the land is going to be, less scarce is the good land going to be, and more expensive it's going to be at the end of the day.
Without a doubt, and I think as an opportunistic investor, the areas, the geographies that are popular and high demand, that's the easy part.
Right.
As an opportunistic investor and working with individuals like yourself, your role and our role is to identify what's going to be next and what areas, what geographies are going to be the next up and coming, well-established, high-demand markets. And really it's about striking the right balance, because if you're too late and you buy in very well-established neighborhoods,
Right.
yes, that feels good, it's comfortable, there's some safety there, you know it's in demand, but a lot of the juice has already been squeezed out of that fruit.
Exactly.
But there's equal challenge, if not more, if you buy too early, because you don't want to buy an up-and-coming neighborhood that's up-and-coming.
Right.
You want to be there where you're not waiting 10 years.
Exactly.
And so for us, having that investment management background, we really bring that to any site or piece of land that we look at. We obviously have developments downtown Toronto, and that's really sort of the blue chip, easy, it's part of the future.
And you're going to pay a premium for that location.
You're going to
because
pay
you're
a
getting all
premium.
that infrastructure.
Absolutely, and when you think about buying land in well-established locations, think of it as almost insurance, right? And the premium you're talking about, in many ways you could think of that as you're paying insurance because it's already well-established. But there is a trade-off for that comfort and confidence that comes with buying in a well-established area. You're paying a price for that, like you said, a premium. And so the best opportunities are the ones that strike a little bit of both. What I mean is that they're not too early, where you're waiting 10 years before the masses understand and accept that that's a high demand location.
Exactly.
But at the same time, it's not so well established that a lot of that return has already been realized.
That's right. Now, we're in a time frame where the market change it's been drastic. From 6 months back, 7 months back, it's a whole different animal. There's a lot of negative news out there. There's a lot of talks about the recession. So, what gives you the confidence to come out with so many projects that you have in the pipeline right now?
Well, look, we're professional investors, right? We've been investing for almost 25 years. We spend a lot of time looking at risk, return, opportunity in various asset classes, from the stock market to the bond market to the real estate market. And so we look at these circumstances, we look at these times, I wouldn't say as more opportunistic, because at the end of the day, let's face it, it doesn't feel good for anybody. But we find that you have a higher probability of identifying opportunity in these type of markets because you don't have as many market participants, right? Whether you're a developer and you're buying a piece of land, there isn't 15 developers competing for that site.
Right.
Or if you're an investor, for example, looking to get into pre-construction, you're going to be able to access or get better visibility and allocation to a project, whereas 6 months ago, 12 months ago, 18 months ago, many investors that were looking at building a pre-construction portfolio were not able to, because they simply were not able to get allocation to projects. So this type of market does actually have its benefits.
Right.
And it's not going to feel good. You're not going to like the journey and what it feels like in this environment, but I really do believe you're going to like the result. And that result is 4, 5, 6 years down the road when the building is done.
Yeah.
And so it's important to make investment decisions not based on what's going on today. And this is why most investors, whether they're buying stocks or pre-construction real estate, actually are not successful in investing, because they buy when it feels good, and when it feels good, it's usually lots of market participants.
That's right.
Prices are high. It's a seller's market, and they don't buy when it doesn't feel good. When technically speaking, that's when you should buy, because you have more choice. You're able to negotiate potentially better terms.
Yeah.
But this, without a doubt, is an environment that, if you take a longer term view, can be very opportunistic. Wealth is not created during good times. Wealth is created during recessions, depressions, challenging times where you're able to do something that others aren't and set yourself up for the next 2, 3 decades.
You brought up an excellent point. What I always tell people who are looking to buy pre-construction especially, don't go with the craze, don't go with the crowd. Just because 10 other people are buying doesn't mean it's a great project or it's a great time. Look at what the market conditions are. Look at what your comfort level is. We're in pre-construction. The beauty about pre-construction is 5, 6 years, like you said, 4, 5, 6 years, depending on what the project is. So yes, we are, let's say, in a not so favorable market right now, but 4, 5, 6 years down the road, obviously things are going to change.
That's
so
right.
that is what the beauty about pre-construction is. That is why myself and people I work with, they're so inclined towards buying it at a market when things are relatively slower, because this is the best time. Because if you're going to put the money back in the bank, what are you going to get? You're not going to get anything at all.
Yeah.
I mean, if the inflation is 8.1, 8.2%, like 50,000, 60,000, 100,000, whatever you have at the bank, is just depleting. It's just a waste of space. It's just not going to do you any good.
Yeah, well, and the other thing with pre-construction is that interest rates don't really matter. And what I mean by that is that whether you're buying a pre-construction unit today or you're buying it 6 months ago, because you're only responsible for putting the down payment,
Exactly.
the higher rates don't have the same impact as opposed to if you're closing. And it's important for investors not to confuse closing on a unit today and buying a pre-construction unit today. And so you can make the argument that all that's changed in pre-construction is that you have more choice, there's more incentives, you have access to buildings and suites that you otherwise would not have.
Correct.
But the fact is, you're closing 5 years from now, 6 years, depending on the project.
Right.
And so where interest rates are today doesn't matter at all. The fact that rates are higher does not matter at all, because
Exactly.
you're making a decision today for
the
5,
future.
6, 7 years down the road.
That's right.
And we strongly believe that when investors look back, they will see that this was a snapshot in time, that if they were willing to do something that didn't feel good but is going to have a great result, they would look back and say, that was actually the best time to buy,
Exactly.
right? And that's, I think, what's getting mixed up for some investors. But I'll tell you, when we sell buildings, we're seeing savvy investors, sophisticated investors buying today no differently than they did 12 months ago. You know, the irony of all of this is when markets are high, you have many that say, well, things have gone up too much. I'm going to wait for it to go down.
Yeah.
And then they go down and they say, well, I'm worried it's going to go down more.
Yeah.
So the point is that if you're an investor, you don't want to make decisions based on what's going on today. Whether great things are going on today or not so great things are going on today, you're making a decision today for 5-6 years down the road. And so interest rates really have no impact on pre-construction, other than depending on how you're getting your deposit, it could impact that, but that's a very small consideration in the grand scheme of things when you look at the overall price.
Now, that's one part of it. The other one is overall the health of the economy, the amount of people coming in. Immigration is such a huge factor when it comes to the Canadian economy, especially in a place like Ontario. I read a report a couple of days back where in the next 2 decades we should be expecting a little over 6 million immigrants.
That's right, yeah.
Now, where are these, let's presume it is 6 million. Where are these 6 million people going to go in Ontario? They're going to come to the GTA, they're going to go in areas close to the GTA because this is where the infrastructure is. This is where the colleges are, this is where the universities are, hospitals are, the jobs are, the tech firms are.
Yeah.
So when you look into those kind of aspects, I think it was about 150,000 immigrants came last year, which is well below than what it should have been. And immigrants need places to stay, jobs, obviously, and it has to be done. It's got to come from somewhere. So when you look into those kind of things, especially now when the market is so expensive, the houses are like a basic house is $1 million. People are going to need a place to stay. So yes, the economy is going to rebound back with the interest rates are not going to be the same, even though it doesn't really matter, like you said. But at the end of the day, people are here. When they do come, they're going to need something to live in. Yep. So when you're buying those condos or just real estate in general, it's very safe to say you're always going to be able to find the tenants, because I come across this almost every day. Oh, what if it doesn't rent? The difference between renting and not renting is $50-$100. Just just reduce that by a couple of bucks, and then it's rented out. Yeah,
well, I think it's interesting. So we live in a time where it's the gift and the curse, and what I mean by that is there's so much access to information. That's a great thing, but it's also a negative in the sense that not all information should be treated the same way in making any investment decision. Right. And so when you look back 7 years from now, 8 years from now, 10 years from now, we're not going to talk about COVID. We're not going to talk about the Ukraine-Russia war. Right. We're not going to talk about higher rates. We will talk about it in the sense that, yes, it was a snapshot in time, but these are not going to be items. These are not going to be events that are going to be relevant to life 7, 8, 10 years from now. And when you're making an investment decision, you want to make the decision based on what events are going to be relevant 6, 7, 8 years from now. So when you look at the matters at hand, good and bad, and you take out what will matter 6, 7, 8 years from now, and what you'll see is really the most dominant item that is there is the immigration story, like you're talking about. And to sort of put a few numbers into perspective, about 200,000 on average immigrants come to Canada pre-COVID. With COVID and the borders being closed, that number was less. So there's a bottleneck, there's a backlog. And the government's told us now that they expect 400,000 immigrants per year for the next 5 years at least, right? The stat you quoted is longer term, but even if we're more conservative and say just over the next 5 years, with the 200,000, we were short 30, 40,000 homes a year. Now you're doubling that. So the labor does not exist to build more homes. So the shortage in housing is only growing. Right. And this inherently fuels significant demand for housing. And one of the things I'll say that many don't realize, and it's not talked about a lot, is immigration. Everybody needs a home to live in, and it doesn't matter if they're buying or they're renting.
Right.
Because let's face it, when we launch a building, a large percentage of those buyers are investors. They're Canadian investors, middle class, husband and wife, couple, working, and maybe one's a teacher and one's a chiropractor, right? Good jobs, but they're not going to be millionaires from their salary.
Right.
So they buy a unit a year, and that unit they can rent out to a new immigrant family that's coming here because they need a place to live. So immigration fuels housing demand. Not only they're not coming here to buy necessarily. Some will buy, but even when they're renting, that rental demand is fueling investment returns for the couple that's been in Canada and makes an investment in pre-construction.
And I remember making my first investment 12 years back, 10 years back. I mean, even though I was kicking and screaming purchasing my first condo because I was told to do so, and that's one of the best decisions I've ever made. It makes you be responsible. It makes you, it just grows your portfolio. It's almost like a third or fourth earning member in the family.
Yeah, that's a good way of putting it. And look, I think for investors, when you start out investing, the fact is you don't have enough capital to be in every asset class.
Exactly.
Right? When you're starting out, you can't buy stocks and real estate and high yield bonds and investment grade bonds. So investors tend to start with a less diversified portfolio, unfortunately, because it's hard to diversify. And when you look at the math with real estate, because leverage is involved, if you're making the right investment decision, and this is not something we're talking about today, you have to talk to someone like yourself that can give the good and the bad of projects.
Yeah.
But assuming you're making the right investment decision, the math is much more favorable to pre-construction than it is to equity markets for investors that are starting out. Because if you have $100,000 to invest, if it's in the stock market and you earn 7%, you've made $7,000 a year. Whereas that $100,000, because it's a 5% deposit structure, let's say buys you a unit that's $500,000, and that $500,000 unit goes up by, let's say that same 7%, it's $35,000 a year.
Exactly.
So you've made more than 100% return per year on your investment. And so it does create an environment where wealth can be created more quickly. Again, there's risks attached. You have to do your homework.
Yeah.
But that model where you're just putting down the deposit can be very opportunistic and beneficial to investors that unfortunately in other asset classes is not available.
And you're very right. Now, moving on, with your investment, obviously you're big on investments. With your experience in the investment side of things and your decades of experience, where do you think this economic cycle is going to go in the next 12 to 24 months? What do you see long term and short term?
Look, I think we'd be kidding ourselves if we said, "Oh, this is a quarter blip, and then we're going to be back to the way things are." We don't think that's the case. We think over the next 12 to 18 months, at least 12 months, but probably more like 18 months, it's not going to feel great. Right? You're going to have the fact that higher rates are now going to be absorbed by the consumer. Consumers are not going to have the same discretionary income.
Right.
You're going to see a lot of younger sort of professionals not be able to buy the $14 avocado toast, right? Not spend money the way that they have. But this is all healthy, and this, look at the next 18 months as an opportunity to set your portfolio up for the next 10 years. And so if you're waiting for things to feel good to invest, then you're going to lose your window of opportunity to have access to more pre-construction projects, to have the choice of the suite you want in the building, maybe to get a little bit more incentives. When things feel good, developers are not going to offer that anymore.
That's right.
So this is your window to set yourself up, not for the next 3 months or 6 months. The decisions you make today are for the next 5, 7, 8 years. And that's the mindset that the sophisticated, experienced investor will have. They will say, I'm going to put this noise aside because whether in the next 18 months the economy is in a recession or it's doing well, it doesn't matter because the investment I make is going to come to fruition 5-6 years from now. So why does it matter what happens in the next 18 months? Right. So, but that said, we do think there's going to be continued economic slowdown. We think the good news is rates are going to stop rising. We think there's a high probability September will be the last rate hike. But that doesn't mean that the next day it's roses and peaches and sunshine. I think then you have the period where the digesting takes place and the higher rates actually, we start to feel that in terms of what it means for the consumer. But again, pre-construction, you could, to be really frank, when an investor or client asks you what's going to happen over the next 12 to 18 months, you could say it doesn't matter. Because the truth is, it doesn't matter. You're making a decision for 5, 6, 7 years down the road. And whether it feels good the next 12 to 18 months or it doesn't, it would be misleading and dangerous to make an investment decision for the long term based on what's going on in the short term. What I do know is going on in the long term is exactly what you brought up, which is Canada continues to be one of the world's most dominant hubs to attract immigrants to come and live here. And when you look at Canada, Toronto, the GTA, really has an unfair advantage compared to other markets because many of these new families and individuals immigrating into Canada, it's like we have great provinces and great cities to live in, but there's no question Toronto is leaps and bounds ahead of other provinces in terms of jobs,
education,
economic growth, right? I mean, we saw Toronto pass Chicago is now the third largest city in North America. If you look at all of the luxury hotel brands, they're all here. They're all continuing to come here. It gives you everything for everyone.
A lot of confidence. It gives you a lot of confidence investing in the area, if not just the city, where you have fantastic infrastructure, which is obviously growing even more with the LRT that's coming up. Places like Hamilton are, they're getting an LRT of their own, and every aspect of every cities outside of even the GTA, they're getting fantastic infrastructure. So it's great to be in a place where you're close to universities, you have high-tech jobs. What else could you ask for? I mean, that's the most ideal place you want to be.
Absolutely. So you draw a map, and if you have Canada, you draw a map which really takes the GTA and surrounding regions, and then you look at that and get more specific, more micro, to really hone in on the best opportunities. So we start with looking at Toronto and the surrounding areas, and then you ask yourself, what areas don't have major transit yet that are confirmed to get it? Because if you don't have LRT and then you get LRT, that really enhances the livability and appeal of that community. If you're buying in an area that already has LRT, that's great, but understand that benefit has already been realized in the price. So we like markets that are around the downtown core, and we like downtown, and we have projects active in the downtown market. We're launching 2 this year, but where we see the best investment opportunities are around the peripheral. And if you look at Toronto and drew a circle around it, not everywhere around the circle is the same. Some areas are more opportunistic than others, and really it's about which market has not had its turn yet. Some suburb or surrounding markets have had that appreciation start earlier, and so some of that has already been realized. But areas, for example, like Hamilton, we think Hamilton single-handedly is the best, most opportunistic geography in all of the GTA. And talk is cheap. We back it up with spending money in acquiring sites and what we've done with the commitment that we've made to Hamilton with existing projects, new projects that we're launching. And a lot of that is because all of the great aspects that exist in the most opportunistic markets in Toronto are all coming to Hamilton, right? LRT, investment from the government. In fact, Hamilton has received the largest infrastructure investment in Ontario's history.
It's huge,
You have large corporations like Bell Canada that are making big investments. Like you said, you have university. The downtown is all being regentrified, and let's not forget the waterfront. Right. So there's a lot that's there. Whereas when we look at other regions, they're also opportunistic, but they don't check as many boxes.
You're correct. Now, you've already answered this to a certain extent, but when would you say is the right time to get into the market? As a first-time investor, as a veteran investor, if you're sidelined, if you're not sure, when is the right time to get into the market?
Look, I think, we spend a lot of time with investors on this subject, but don't try to time the market because you're not going to get it right. And the reason why you're not going to get it right is no one's gotten it right.
Yeah.
People smarter than us with more resources can't get it right. So have the humility to understand you're not going to get it right,
Yeah.
because it never feels good. When the market's doing well, like we said, it's too expensive, you're going to wait.
Yeah.
And then the market goes down, what you were waiting for happened,
Yeah.
but the market doesn't go down and you say, oh, this feels great, I'm going to buy. When the market goes down, you tell yourself the top 10 reasons why it's going to go lower. So if you're trying to time the market, time goes by quickly,
Right.
and you've missed out.
That's
So the key is the investment decision should not be made based on what's going on in the market. The investment decision should be made based on what's going on in your life, right? If you have a steady job, if you have savings, those are some of the fundamentals that need to be in place
Right.
to be able to take a long-term view to have a successful investment. And so if those are some of the fundamentals, if that's in place and you're able to take a long-term view, that's the time to get into the market.
That's a fantastic way of putting it. I'm going to use that with my clients.
Good. Excellent.
Now, you have a lot of land deals coming through your desk every day, I'm sure, obviously. Like, you're a busy man. Which areas do you think are up and coming? Which areas excite you? Like, where do you think the next boom will go?
Yeah, I mean, look, we talked a little bit about it. We are very active investors and developers in Hamilton.
Mm-hmm.
In fact, we just about a month ago, as you know, launched a design district.
Yes.
That was the largest approved residential project in Hamilton. When we started acquiring land in Hamilton, many said, Hamilton, well, what, there isn't this, there isn't that.
Yeah.
But look, the best neighborhoods are the ones where you'll drive there with someone older than you, and they'll say, you won't believe what was here before.
Yeah.
Well, those make the best investments, right? If already it's obvious, then the juice has been squeezed.
Exactly.
So with Hamilton, it's really the perfect storm, Saurabh. Right now you have the LRT, which is going to allow you to get from downtown Hamilton to downtown Toronto faster than driving from midtown Toronto downtown on a trafficy day.
Yeah.
So you have LRT that's going to hit all the major lines, bring you right downtown. You have the largest infrastructure investment in Ontario's history. I mean, you can't say that about 2 or 3 markets. There's
Right.
only one largest investment in infrastructure in Ontario's history. Hamilton's receiving it.
Mm-hmm.
So you have the government commitment that's there, but then you also have the large corporate commitment from companies like Bell Canada that are
Right.
spending almost $500 million to redo the digital infrastructure that's there. And then in terms of livability, being in Hamilton, there's 2 main areas that have a lot of potential that we think are going to now start to come to light. One is the downtown, the other is the waterfront. Both of them are receiving $150 to $180 million investments independently
And that's huge.
to be redone,
That's
right?
huge.
So Hamilton is not 5 years from now going to be a market where if you live downtown Toronto today and you move to Hamilton, you're going to be commuting downtown Toronto for entertainment, for social,
Yeah.
for work. Hamilton is going to become an area where you could do it all. You have the waterfront, you have the downtown, you have the sports arena, and then you have mass transit there as well. And I'll tell you, this is something that's really interesting. In the last 5-6 weeks since we've launched Design District, we've had 2 very large Toronto developers call us and say, and these are developers that have never done a project outside of downtown Toronto.
Wow.
They've called us and they said, can we talk to you about Hamilton because we're starting to look at land there, right? So for our buyers that purchased, this sets them up. We pioneered that. When we sold One Jarvis a year and a half ago, we sold it at $760 a foot.
Yeah.
Today, Design District is flying off of the shelves at just under $1,100 a foot.
Mm-hmm.
How do you think the investors at One Jarvis feel? Really good.
Exactly.
And we think that we're still in the very early stages, because look around the GTA, there's nowhere that you can buy around the
Nowhere at all.
$1,100 per foot. So the key is to bet on a developer that is well capitalized, because you need to know that the investment you make is going to come to fruition. But the second part is, and we were very passionate about this at Emblem, is make sure, one of the, I think, shortcomings of development outside of the downtown Toronto area is that developers historically have designed and built suburb-like condos for the suburbs. They weren't downtown Toronto condos in the suburbs.
Right.
There wasn't the same commitment to finishes, to design. Let's face it, the buildings were not as sexy.
Exactly.
So what we do at Emblem is we pride ourselves on saying you can take any of our buildings and put them anywhere, and they will stand against anything that's there. So the buildings that we're putting in Hamilton can be downtown Toronto, right? And you see that with the finishes and the design of Design District. So you take an up-and-coming neighborhood, you check all of the boxes from transit to waterfront to downtown, and then you put a downtown Toronto building there. It becomes really the perfect storm for a great investment.
Ever since I met you, the very first time I met you, you have always given me that example. You've always really stood behind that model.
Thank you.
And that means a lot as somebody, as an agent who's selling for Emblem. Selling that gives me a lot of confidence.
Sure.
I have a lot of clients who are looking into past projects and looking into design or future projects,
Yeah.
because they know because what they see with the experience and what the presentation centers, that really does get them excited. Especially with the Louis Vuitton finishings and stuff. It tells a great deal about the attention to detail.
Thank you.
That you put in.
Thank you. And that to us is something we take very seriously. When I look at the buildings that we've designed, that whether they're at development stage or they're under construction or even finished, we're exiting 3 buildings this year. Then in terms of their construction, anywhere we do a building, Saurabh, we want to do something that hasn't been done, right? And we're not looking to fit in. We're not looking to build something that's at the standard of what's there. Whether we're in the suburbs or downtown Toronto, our commitment to our buyers is that we put forth a project that exceeds the existing standard. Mm-hmm. And I think that many underestimate that the consumer today can understand the difference between just doing it and
sure.
being very passionate about
Most
what
definitely.
you do. So we pour a lot of our energy into the details. And to be frank, today even buyers only probably appreciate or notice half, 50, 60% of the details. So we don't even just do it for the consumer. We do it because that's just how we're wired. And you can't fake passion.
Yeah.
And I think that conviction comes across in our design, in our projects, and our commitment to quality. And we take the responsibility we have, whether someone's buying our unit to live in it or they're buying it as an investment, we take that responsibility very seriously. We want your clients to come back to you and say, Saurabh, I bought 3 units, 1 was from Emblem, and the other 2 were from other developers. Every part of the experience with Emblem just felt a little bit different. Mm-hmm. And that's what brand is about, that's what reputation is about. And we're very intentional about how we go about that.
And that's a structure that's going to be there for a long, long time. So
right.
Even 6 years after the closing and stuff like that, people would come in and look at any of their buildings and it would be like, this is like, there are buildings in downtown or anywhere else I would go in, I wouldn't say the address of like, this is this particular project. This is what it is.
Yeah.
Because you remember the finishes, you remember the effort that was put in by the builder. You appreciate the aesthetics of it, like the design, the hard work that went behind the project. So that's how you remember. Yes, this is an Emblem product.
That's right.
At the end of the day.
Absolutely.
And that's a statement piece right there.
Absolutely.
Basically.
Because look, Hamilton today doesn't have a lot of supply. But 5-6 years from now, when there's 10 buildings there, you want to make sure your suite stands out whether it's resale or you're renting it out. And so, like for us, we go a little bit overboard, because we take a long-term view. When we announced that Louis Vuitton is going to do custom furniture for all 3 lobbies at the Design District, people said, why are you doing that? That's too much. Well, that's just, we build icons, we build timeless buildings. When we had Bertie Felick engaged to do the interior design, Bertie Felick does the W hotels. Most people would say, that's too much for a suburb product. But we do it as much for ourselves as we do it for our buyers, and there's a certain standard that we operate at, and we're okay not maximizing the profit on a project in exchange for building a brand that stands out in the marketplace. And so we're very passionate about that, and we're very intentional about that. And I think the benefit is that it creates a relationship with our buyers where everyone wins. We win because we're building a very strong reputation and brand, and they win because for whatever dollars they're spending, they're getting a product that arguably is better than what else is available.
Very nice. Now, you're a very well-traveled person. I know that. You've been to many top-tier global mega cities all across the globe. Now, Toronto is obviously an emerging, city that's growing, that's creating a lot of buzz. It has been for a couple of years. What impact do you think that's going to have on Toronto? Where do you see the city going in terms of real estate?
Well, look, Toronto's growth has been like this, and many of us that are living in Toronto still haven't accepted that Toronto is on warp speed in terms of being a global mega center. Let's not forget, it wasn't that long ago that if a couple were both working, they could afford to live downtown.
Yeah.
That changed like this.
Yeah.
Right? Today, a couple could be both working, 2 incomes, and most 2-income families can't afford to live downtown. And that speaks to the growth in the market, the appreciation in the market, and really the strength of the housing market. And so we talk about more affordable housing, and I think that's an important part of the conversation.
Yeah.
But the fact is, Toronto is not a Canadian city. Toronto is a global mega center. And I think that we're still in very much the early stages, because when you look at price per square foot in Toronto, especially the suburb areas that haven't had their turn yet, and you compare it to other mega centers, we're still not expensive. If you compare it to where Toronto was 5 years ago, it feels very expensive, but you can't compare to where Toronto was. You have to compare it to the global landscape, and Toronto still looks very opportunistic. So the fact is, we have a supply problem that's not going to get fixed.
Right.
Because at the end of the day, we can have 2, 3, 4, 5 more developers come online, but everyone is using the same pool of labor. It's the same trades.
Yes.
And that pool is not growing. So we cannot build housing really much faster than we are. Certainly there's ways to become more efficient. We talked about the process with the city and approvals. That can improve. There's the conversation around development charges and levies that can make housing more affordable.
Right.
But in terms of the supply problem, we can help it, but we will continue to be in an environment where demand exceeds supply. And that's a great place to be if you're an investor.
Oh, for sure. And that's been, sorry to cut you off, but that's been the case basically for the past few years. It's like the demand has always been high, pre-COVID, during COVID, even now. The demand is still there. It's now we're facing different issues than what we were facing before COVID. But the supply is still an issue. Demand has always been the same, if not increased.
That's right.
So I mean, we're yes, we are in a market where labor is short. We have supply issues. We have labor issues now. But the demand is still there, and now, because of the market we are in, interest rates are high, blah blah blah. The rents are going high.
That's right.
It's fantastic to be a landlord at this time. So at any given market, had somebody invested 5-6 years ago, they're having a hell of a time right now, because they bought for 5 years ago what we sold the real estate for, it doesn't exist. That price point does not exist.
No, and you know and I'll say sort of one thing that I think is really important is the best things in life, they don't feel good when you're going through it. You go to the gym, you exercise, it doesn't feel good. The journey doesn't feel good, but the result feels very good. You're in school, you're studying doesn't feel good, but the result feels great. Investing is the same thing. It can't be that when you invest it feels good and then the result feels good. That's too good of a feel-good story. Life is not that easy.
Exactly.
So the best time is when it doesn't feel good because there's less market participants, you have more choice, better valuations, better terms, and so that's the environment we're in now. And so if you're making an investment decision for how you feel today, you're not going to want to invest. But that's not the way that sophisticated investors think. At the end of the day, whether things going today are well or things are not going well, the investment you make, the result of it will not be based on what's going on today. It will be what happens 4, 5, 6 years from now. And so if you're investing at a time where confidence is lower, there's a higher probability that 5, 6 years from now, the confidence will be higher than where it was today, and that's where the appreciation takes place.
Right.
So invest at a time where it doesn't feel great, because in hindsight, you look back and say, I wish I invested more. You never want to invest when everyone else is investing because you're paying top dollar.
Yeah.
Whether you're buying a stock or you're buying a pre-construction condominium.
Yeah. Now, you know, you've been great with the time providing me today, like coming in to see me, have this little nice discussion. One last question I have for you.
Sure.
In Toronto, you've obviously lived here, so do I. Do you have any store or service that you really enjoy and you think is underrated in the city?
Oh wow, that's a great question.
It's not an easy question.
Yeah, no, you know, it's interesting. Some of my favorite places are places that they don't even have a sign, if that makes sense.
Yeah.
You know, it's individuals that run a business that, quite frankly, they're not great business people, but they're very good at the service or product that they provide.
Yeah.
And that's where all of their heart and soul goes into it. So these are single location restaurants or product providers. So for example, our office is at King and Bay, and I'm a big smoothie guy, right? So I'll always have a smoothie, and probably for the last 10 plus years, I've had 1 or 2 smoothies a day. The best smoothie I've ever had in my life is in The Path, and it's a family-run business. And if you asked me, Kash, what's the name? I couldn't tell you because I don't think it has a name. They actually don't even have a sign. They're in The Path. There's other restaurants, but they don't have a sign. They don't have, the menu looks like it's from 1975. Nothing about it is great other than exactly what you're there for, which is the smoothie. Yeah. The price point's amazing, and what they put into it and the taste and the ingredients are always amazing. So I'm a big supporter of that sort of terrible marketing but great product type of thing, because that's where you often get the best product or service for what you're hiring them
I mean,
for.
at the end of the day, as long as the product is good, there will be lineups outside of the building.
Yeah.
You don't even need marketing for those kind of things.
Yeah.
I mean, mine is there's a small record shop on Queen and Bathurst. There's a very small, like a hole in the wall.
Yeah.
And then when I used to live downtown many years back, that's pretty much where I used to go. And I still have those vinyl records. Yeah. Every now and then, I go and pick something up. It's still there, and it's a local favorite. So it's not about the marketing. As long as there's fantastic service and the product is great and the interaction is great, you just want to go there automatically.
Yeah, and that's one of the things that makes Toronto an amazing city and a high growth city, is that we have so many different communities within the community, right? Mm-hmm. You go to other big cities, the diversity we have here, you think about food, you think about cultures, you can drive 10 minutes and get a completely different experience from one end of the city, to a few blocks over and get a very different, and there's not many cities in the world that offer that. And what that does is it attracts a wide variety of immigrants because they have a community away from their homeland when they come here.
Exactly.
And that creates great great places to eat and try very authentic foods. products, like you mentioned, you have this small business owner mindset,
Right.
and that's all over Toronto. So it's more than just sort of this growing city, but there's some nuances that are very unique and make it special to actually be here and live here. And sometimes we take that for granted until we leave and go to another city and realize that it's although their population may be high, everyone thinks the same, everyone kind of acts the same, everyone speaks the same, and the diversity isn't there. And through that diversity, some great things happen, great ideas come out, but also just great experiences. And that, I think, is part of what makes Toronto very special.
And Canada as a whole, because the immigration is what brings all these different values, different cultural entities. It's like things you would never, imagine.
Yeah.
Like 2 weeks ago, I discovered a kebab shop in Scarborough, and these guys came roughly about a year and a half, 2 years ago as Syrian refugees.
Wow.
And their business is booming, and I have to drive from North York to Scarborough to get my, fix of like those kebabs now, because they're so authentic. They're not like a multinational. There's like two
One
brothers and a
location,
sister, and it's amazing. It's
terrible sign, terrible menu, but amazing
fantastic
food.
food.
Yeah.
So that's
We have
what
a lot of that. It's amazing.
A lot of that, yeah. And then this is what makes us Canadians. This is like we welcome the people from every part of the world, and they're here to flourish. They make a name, and
we have a reputation for that. And I think that's part of what really fuels the immigration.
Exactly.
That fuels population growth, that fuels the strong demand for housing, which fuels great investment opportunities. So It's all intertwined.
It's exactly. It's all one piece of the puzzle.
That's right.
Kash, thank you so much. I really appreciate your time today.
Great to see you.
And
Thank you.
always a pleasure seeing you. Thank you.
Thank you, Saurabh. You're welcome.